Morning, ladies and gentlemen. This is Greg McCloskey from FXDD, and this is the Tuesday, March 30th, 2010 New York opening Forex report. Let me remind everybody before we get started that trading Forex is risky and should only be done with risk capital, not change your lifestyle. Traders could lose all their risk capital trading Forex. FXDD is not guarantee any recommendations made within this commentary. Traders should make market assessments and take trading positions based on their own personal market analysis, risk tolerance, financial condition. In addition, care should be made to only use leverage which is congruent with your personal risk tolerance. Although care was taken in creating this report, the FXDD does not guarantee the accuracy of the information. We did see the pound sterling rise here this morning. The final GDP for the fourth quarter, which is the fourth quarter, folks, that's December, rose by 0.4% versus 0.3. Expectations, this was up just a little bit more than expectations. Also, nationwide home price index rose by 0.7, which was better than expected at 0.2. So that better data has propelled the sterling back to the upside here. We actually broke through the 200-hour moving average, as you can see here, at the end, and the 38.2% retracement at the 150.21 level. That was a level that we held yesterday at this point. So this was a key break in the market from a technical perspective. Said, okay, we got to move higher. We want to move to the next level, which is a 50% retracement, which is currently where the market is trading right now. We're at 150.89. The current 50% retracement is 150.90. So we should see some resistance here as we enter the New York session from a technical basis, and we'll see what the position squaring on the New York opening does, and see if that actually comes down off of that level. In which, taking a look at the 5-minute chart, you can see here that the market was converging here, the 100 and the 200 bar moving average, and we're converging with the price at this level. This is called two's company, three is a crowd, and the three is a crowd suggested that the market was going to be moving either to the downside or to the upside. We did come down and test, try the downside here on a couple different occasions. Then the market started to use the 100 and the 200 bar moving average as support. As you can see here, could not confirm to the 200, could not confirm to the 200, used the 100 as support, and then started to move to the upside, where it just marched higher like it should. Currently, again, the price is trading right at resistance at 150.89 or 90, and we'll see how that all reacts in the Eurozone. The Greek issued their debt at twice the yield of the German debt, which is apparently good news, and that caused the euro to move higher, but since come off, as you can see here, as the sterling rose and the euro came off. So I mean, euro sterling would have come off as well. We are talking about this 200-hour moving average as being a key level, and indeed it was. The market moved up to that 200-hour moving average, pause during the Tokyo session, and then was able to break through. It broke through at the, let's see here, what level was that? At 134.86, and it starts to move to the upside. It's now at 50% retracement, or it's testing the 50%, or tested the 50% retracement at the 135.42 level. It was a good level for market players to sell, and indeed they did. The market fell short of that by a few pips, and then started to move back to the downside. The current price is trading below or right at the 134.74 is the 200-hour moving average. We move currently the price is trading 134.74. So just like the sterling, we're at a key level here for the euro versus US dollar. We're going to find support, in which case the market may move higher. We also have support at 134.37. I'm going to move lower and move down to the 134.37 level. That again was support here, and if you go to the daily chart for the euro versus US dollar, that was a low right here. So in this triple low that we had here for that currency pair yesterday, we held that during all of the New York session here, and moved higher off of that. So that would be a key level on the downside. And you can see here the low came in at 134.53. So we had some early buyers against that level from the 5-minute chart. We saw the market perform like it should. Held the 100 and the 200 bar moving average, bounced off the 100 here. Spiked to the upside and came down. Use 100 as resistance. Boom, 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 down to the. So the bias is to the downside. If we stay below this 100 bar moving average at the 134.91 level, then the bias should remain to the downside, and we should maybe perhaps go down and test that 34.37 level down below. Taking a look at the dollar dollar versus yen. We put the hourly chart here, and you can see here yesterday we were looking at this triangle formation here, talking about, okay, breaking through the support, breaking through the resistance. Needless to say, the market broke through the support at the 92.42 level and went down. Where did we go down to? Went right down to test our favorite, the 100-hour moving average. The market actually broke through that 100-hour moving average at this point right here. That level came in at the 92.16 level. The market low went all the way down to 92.11, and then started to use 100 as support. All the way, I mean that sarcastically, and then but quickly rebounded and started to move back up to the upside. Currently, we're back within this old triangle. I'm going to keep that in there. The old triangle levels in there. 92.47. We'll look for support. We'll look for resistance up, still above on the top at the top part of the trend line. 92. Did I say 92.47? 92.47 and 92.74 on the top side. So they reverse each other. 47.74. Taking a look at the 5-minute chart, two moving averages and the prices converged at this point, and then the market sold off rather quickly. Went through that trend line, which helped it to go to the downside, and then bounced back up to the 100. Broke through the 100 here, broke through the 200, used the 200. Yeah, these things tend to work. These moving averages, for whatever reason, they give traders good opportunities to buy and sell against certain levels. Take a look at the dollar versus Canada as we enter their trading time zone, if you will, and we came down 50% of this move to the upside. This move takes it from the low on March 19th to the high that we reached here on whatever that date is, March 25th or 26th, and then the market started its correction to the downside. We came down to the 200 bar moving average, found support there yesterday, moved up to the 100 within the goalpost. This is the old goalpost trade, trading between the goalposts. Goalpost defined by the 200 bar moving average on one side and the 100 bar moving average on the downside. When we broke through the bottom end of the goalpost, the market did go down, but we went down to the 50% retracement at the 101.81 and found some support there. Currently, price is trading at 101.90 off of that level. So it's respecting this level, and it's respecting the 200 bar moving average. You can see over the last few hours, market stayed below the 200-hour moving average. That currently comes at 101.92. So clearly the trade as I see it, at least, is that if the market moves above the 200 bar moving average, we should head up this way. If the market stays below and moves below, keeps its bearish bias here. For those people who may be short against this level, stay short until the market breaks above the 200. If it gets below the 50% retracement, look for a move down to the 101.52 level for that currency pair. The Aussie versus US dollar, we were talking about the this key level here, the 101.94 level, and you can see here that the market went up to that 94 level, came off a little bit, and now is back up, is above that key level, traded to a high of 91.94 is a key level, and the high comes in at 92.13. Currently priced is 92.02. 91.94 is a key level, folks. If the market is able to break below that level, I think we see some profit taking the Aussie versus US dollar after the sharp move to the upside, and we could see the market come back down to toward this level, toward the 200 bar moving average. Let's put a Fibonacci retracement in to see what the Fibonacci retracement would be given this current high, which, by the way, it doesn't go short until it goes back below the 94 level. I wouldn't think it was, but the 32.8% comes at 91.32. The 200 bar comes in at 91.43. So I would consider a good support down at that level for that currency pair. Of course, the Aussie's being propelled higher by talks of them raising rates next week, which is helping their currency pair. Another interesting currency pair is New Zealand versus US dollar. Last week, in the weekend report, we talked about this in between the goalposts here, testing the 200 and the 100 bar moving average. You can see over the last couple of weeks, the market has acted nicely in between those two moving averages. The 200 bar moving average is the blue line, the 200 bar moving average is the green line, and they represent our goalposts. And the market held support, and it currently comes in at 70.13. The resistance comes in against the 100-day moving average at 71.41. A break above 71.41 would propel the New Zealand versus US dollar upward toward the 72.19 level, and so we'll be watching this currency pair very closely as we head into the New York session, and we get closer and closer to that level. So what is it, 72? the level comes in at 71.41. Currently priced at 71.27. So we're about 14 pips away from that level, but close enough. So either look for sellers against that level or look for a break to the upside for that currency pair. Taking a look at the Euro Swiss really quickly. This is the dollar Swiss had a volatile move, so is the Euro Swiss, but we are testing the 200-hour moving average. At 200-hour moving average comes at 73.27. The market 73.25. Break above that 73.27. We could see some short covering for the euro versus US dollar to the upside. That's my reporting report. We'll talk to you later. Bye-bye now.